well, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Avan Dubash, and I clearly have the color right today. It's not red, it is green.
We're polar opposites, yes.
It is green, what the market is giving a thumbs up to, because we're at the highest point of the trading session. Nifty has managed to scale past the level of 17,100, and there is a good recovery momentum which is at work today, because it's not only the broader market which is doing well, but if you look at the mid cap and the small cap indices too, they are also doing quite well, though the market breadth has become a tad bit more skewed towards decline. It's almost 1,300 stocks advancing to 700 stocks declining. Reliance, that is the big heavyweight which is contributing almost half of the gains of Nifty today. So Reliance itself is up around 3%, and that is the biggest contributor at the index level. You also have AMCs, NBFC and PSU banking stocks which are doing quite well. UTI AMC is one stock which is doing well. HDFC Life is the other one, and names like CSB Bank, etc. are also up around 9 to 10%. The only laggard or the sector which is underperforming today is IT yet again. That one in fact hit a 52-week low on an intraday basis as well. LTTS or L&T Tech is one of the big drags as well. Remember, Citi had initiated a 90-day negative catalyst watch, so that stock is reacting to that. But of course, globally, all eyes are on the Fed decision, because tomorrow will be that crucial day when we'll get to hear the commentary from Jay Powell, what he has to say about the health of the banking system, whether they're going to prefer inflation and continue with the quantitative tightening, or looking at the systemic risk of the banks. There would be a bit of a dovish tone. That is the critical thing. So lots to watch out for, Avan, when it comes to the capital markets. A lot of cues and a lot of stock-specific action as well, which is in news.
Right, you are. And you do have some of the heavyweights that are in the spotlight actually in today's trading session. Let's pull up some of the stocks that are making the headlines. And Reliance Industries, we've been monitoring that one given the slight underperformance, and now the stock has seen a little bit of a breakthrough. Sources are indicating that Jio Financial Services is going to foray into the insurance business. We are likely to see some sort of an actual announcement emerge in the forthcoming AGM, and ace banker KV Kamath is going to be the chairman of Jio Financial Services, and that really seems to be the factor that's driving the spurt in the stock. Moving right on, there's Sterling and Wilson as well. That stock has been a smart mover from the get-go, 7%, as they bagged a 2,000 crore rupee NTPC project. This is solar projects of 1.5 gigawatts. It's not Reliance Industries, actually. It is Sterling and Wilson. That's the stock that's in focus. And it's 1.5 gigawatts with 3 years O&M, so watch out for that. Moving right on, UTI AMC as well in the spotlight, as PPFAS mutual fund has bought close to 11 lakh shares worth 714 crore rupees. Valuations as well have turned reasonable. Let's connect then with our chartists, Naresh Mirani and Kunal Bothra joining in. And Kunal, from these current levels, you were talking about charting, a pretty hefty target of about 7,300 towards, as we're moving towards that. Given that heavyweights like RIL, Axis, ICICI supporting, is that looking feasible?
So good afternoon, Avan. Good afternoon, everyone. So, my sense is that this recovery is very, very strong on the indices. Now, there are 2 points to look at it. One is, I think the last 3 days, we were trying to test the 16,850 mark. We managed to break below the 16,850 mark twice. On a day like yesterday as well, we managed to break below those levels. But the comeback has been quite strong. So that's an indication that the market tapped into a strong demand zone, and then the demand overpowered supply, and that's why you're seeing the strong bounce on the index. The other way to look at it is that yesterday's behavior is somewhere very similar to today's behavior in terms of the options data. Yesterday, we had a huge amount of put writing at the 39,000 strike. That became a base, and the index recovered in the second half yesterday. Today, 39,500 on the bank Nifty is a very important support, and we've seen an incremental amount of put writing at those strikes. And from the mid-session, when the Nifty broke back about the 39,500 mark, that's become the support. So support shifting up higher at a time when the index is going through a bounce is always a welcome move for the index, and large cap names make a comeback. So all putting together, I would believe that this move could be sustainable. It's just that one has to now raise the stop losses higher. So from earlier 39,000 levels, the stop loss has to now be revised higher to 39,500, and possibly a similar up move of 17,000 as a fresh stop loss for index traders.
Yeah, yes, absolutely. The Bank Nifty futures have already hit the mark of 40,000. So definitely a bit of a pickup there as well. Naresh, your thoughts as to how to best play the market at the moment? What's the strategy?
So what we've seen is clearly that 16,800 zone holds on to the Nifty. The lows of the last 3-4 days are very similar for global markets as well, and we've seen a recovery across the board. Now, the recovery should continue. The only, say, one-day event which is left is the Fed, which is tomorrow night. So overall, once we close above that 17,200 mark on the Nifty, 40,000, 40,200 on the Bank Nifty, post the event, that would be a big trigger, and that could take it higher in a big way towards 17,600 and 41,000, 41,500. So overall, the base is set up. There is just an event risk which has been there. Overall, all the parameters across the world are showing towards a bottom being made, possibly oversold zones, then a recovery, the highest derivative short position on the Nifty. Now, all it needs is a trigger to actually create a move. So for now, bias is positive, would keep a stop loss at 16,800.
All right, that's the view coming in. Let's get in a take as well on the heavyweights, and in particular, Kunal, Reliance Industries. Given the kind of breakout that you're seeing at 2260, is that purely fueled by news or just a one-day pop, or are you seeing the stock heading higher, and what's your target?
Very strong move for Reliance Industries. So I look at it this way, Aman, that the stock in the last 7 or 8 consecutive days of selling managed to break 2 important supports, 2300 and then 2250. And remember, these are very strong support zones because over the last, I think, 1 year, 1.5 odd year from 2021 second half, the stock has been trying to protect the support level. And after today's up move, it indicates that this was probably a minor breakdown of a support, and the stock is back about 2250 mark. So that, I believe, is a strong comeback for Reliance Industries. I believe short-term traders would probably take this in a bullish stride. So even if the stock consolidates for the next couple of days, I believe that now with this 70-80 point up move for Reliance Industries, it opens the doors now for the stock moving up higher by at least another 100 to 150 points. So when I look at from current levels to say the next 1 week, 2 weeks, I would expect Reliance Industries to come back to 2350 to 2400 levels. That should add to more confidence on the index trends as well.
Right, let's move right on then and focus on the rest of the globe as well, as all eyes are peeled on the US Fed and what could possibly be the outcome following that kind of relief rally that we saw yesterday. Antoine Bouvet, who is the head of European rate strategy at ING, now joins in on the show. Thank you so much for taking time out. And it clearly seems this time around that a slower pace of tightening is going to be seen by the Federal Reserve, largely in light of the kind of headlines that have emerged on the back of the banking crisis. Does that seem to be the best case scenario?
Yes, I think 50 basis point hikes are pretty much off the table, given the doubts of how far this will spread to the real economy. But what we can say for sure is that absent further contagion, or not for sure, but our main view is that absent further contagion, the Fed will be in a position to continue hiking at this 25 basis point hike pace.
So that's about the hike and the pause, but what the market is, penciling in or wants to know is, when will the rate cut cycle begin? Are you in the camp as well that will happen in the second half of this year itself, or will it be towards the fag end of the year, or maybe just next year?
We're definitely the first camp. We think that the Fed will be in a position to cut rates later this year. In any case, we forecast inflation to fall relatively quickly in the second half of the year. That with an economic slowdown and now compounded with the difficulties in the banking industry, we think this will set the stage for the Fed to cut rates as early as the second half of this year.
Antoine, what is the outlook then going down the line when it comes to the entire banking sector as a whole? Given that, yes, rescue efforts have been taken to really mitigate the spillover effects or getting much worse, do you believe that this is, a signal of the kind of action that could be taken if there were to be the contagion effect of the banking sector spilling over?
Didier, the short answer is I don't know. There has been a pretty strong regulatory response, at least from the Fed, providing liquidity to banks. So I think there's less doubt now that should a deposit run happen to any bank, they will be in a position to pay the depositors back, and that in turn reduces the risk of a run on deposits. So that's the positive news. There's been also discussions overnight. Bloomberg reported that the Treasury is looking at a way to insure deposits temporarily, should this be the case. above the FDIC $250,000 limit. So all this participates to this improvement in risk sentiment that you just talked about. Now, what's the outlook for the banking industry? At the very least, we'd expect that the higher funding cost and more challenging operating environment for regional banks will result in some degree of credit tightening beyond what was going to happen anyway with the tightening of the Fed's policy. And that in turn is something that is going to weigh on the economy, weigh on inflation, and allow the Fed to cut interest rates.
See the 10-year headed now, because it's been fairly volatile of rate from the start of the year of 2022, where it was at 1.5 level. It moved all the way to 4%, now back at 3.3 thereabouts, and actually moving around 3.5 at the moment. Where do you see them headed on a more sustainable basis? What's the range, do you believe?
Probably somewhere around 3.5 is the top, but like I said, I think the market is right in taking out some of the hikes that was priced by the curve, and this should result is also the peak of 10-year treasuries yield being much lower post that banking crisis than before. So that's the first thing to say. And as for the bottom of this range, I still think 3% is a reasonable target for the end of the year.
3% for the end of the year. And tomorrow from the Fed commentary, are you looking forward to any particular area being addressed? Is there anything specific that you would want to hear from Jay Powell tomorrow?
Yes, I mean, so the first thing to look at is, of course, the forecasts sent by the FOMC. We're not expecting major changes, but it is something that's going to have implication for future policy moves. That's the first thing to look at. And secondly, I'm expecting Powell to draw a clear distinction between monetary policy decision, which is the reason why the Fed is still hiking. Inflation is and has remained above target for a long time. And financial stability decision, which is the decision that's been taken a little over a week ago to provide liquidity to banks, and last weekend to provide dollar funding for foreign through foreign institutions. So that's the distinction is valid, and I think this is something that the ECB also highlighted last week. The question is, to what extent will the market buy it? And I think the answer to that will depend on contagion risk. So for now, I think the Fed has a decent chance of managing that hike whilst acting on the liquidity front for banks.
And it's a busy week as well, Antoine, when it comes to the central banks. There are, you've also got the Bank of England, Taiwan, Brazil, etc. Just wanted to also get in your take then as to what the outlook is when it comes to global central bankers, in particular for the Eurozone as well. What's the outlook that you're expecting from the ECB?
Right. So I think I'm going to make a general statement that applies, generally speaking, to the whole central bank cycle globally. Of course, there are exceptions, but I think 2023 is still different from 2022 in the sense that in 2022, central banks, the Fed and ECB included, Bank of England as well, were catching up with inflation. They were behind the curve. They were hiking almost, in autopilot, hiking 50 or even 75 basis points at a meeting. Sometimes they was clearly motivated by the fact that their policy rate was too low compared to inflation and they needed to catch up. Now in 2023, policy rates are restrictive in much of the world. And so central banks can afford to take policy decisions on a meeting by meeting basis, which means they're data dependent, which means that the size of the hikes will be smaller, which means that we're more likely to be closer to the end of the cycle, which means that it's going to be an environment that is less disruptive by financial markets, because in most cases, we think the peak is in inflation, and therefore there is a much narrower range of possibility for policy rates, and that's something that should in turn result in lower rates volatility and better performance by risk assets. On the ECB specifically, they are slightly behind the curve compared to other central banks, which means that we cannot exclude further hikes lasting into June. But what's happening in the Fed will certainly have repercussions also on the ECB. If the Fed stops its hiking cycle earlier, it's also possible that the ECB has to stop its hiking cycle earlier. This being said, I do think that the ECB is behind the curve and that there will be a convergence between dollar rates and euro rates.
Okay, Antoine, we'll let you go on that note. Thank you so much for joining ET Now today. So the consensus seems to be that we are at the fag end of the rate hike cycle. 25 basis point is something that we'll watch out for. And Antoine believes that perhaps in the second half of the year, there's a possibility of a rate cut as well. So that's something to watch out for. Foreign other markets are definitely excited ahead of that big event, 17,123, highest point of the trading session with almost a 500-point gain coming in for the Sensex as well. But let's get some closing ideas then from our technical experts. Kunal, what's the closing trade that you are executing?
So Anisha, looking at the markets, I would believe that most of the stocks which have actually done reasonably well should be something from the sectors like the banking sector. So one stock which I'm picking up from the banking space would be SBI. That's the stock Canara Bank, which I would believe looks very attractive. In fact, SBI was one of the calls in the morning. Canara Bank is something which I would pick up at current levels of 280, 282 approximately in the spot. My expectation is that 289 to 292 could be an immediate target for the stock.
What about you, Naresh? What are you strategizing at this point of time?
So adding up to the position on IGL, continue like the whole oil and gas space. The stock is on verge of a breakout, still testing that 440 to 450 mark a few times. Even though the markets have corrected, the stock has held on, has recovered back every time from 420 zone back to 440s. If it sustains, it could be a big move here. And today is a day where it has seen good decent volumes and price action. So now revising the stop loss to 430 and adding more positions on IGL.
Those are your closing trades from our chartists. Stay on with us, gentlemen. We'll take a very quick break. And as we do that, South Korean car maker Hyundai has actually launched the all-new sedan. That's the Verna. The starting price is 10.9 lakh rupees, while a range of new and advanced tech-driven features have been introduced. This is actually said to be one of the biggest launches by Hyundai this year. Momentum intact this afternoon as you've got the broader markets along with the frontline indices that are scaling higher. 17,125 and going. A CSB Bank, Sterling and Wilson, Welspun India, Adani Green, Sequent Scientific, SCI. Those are just some of the names that are lighting up the screen. Let's also connect then with Vineet Bulinchkar, who's joining in from Ventura Securities. Vineet, let's start off then with what your outlook is, given the fact that you have support coming in from some of the defensives. Yesterday, for instance, when we saw the rest of the market collapse, you did have the FMCG names sort of cushioning that volatility. Do you believe that this would be a safe space to hide?
Yes, definitely, because we are going to see a rotation out of IT stocks, given what is happening in the Western world and our exposure to the Western economy. And the first place that you will obviously go is into the defensives. So we believe that the likes of HUL, Nestle, Procter and Gamble, Hygiene, all these stocks should do relatively well compared to the rest of the market.
Okay, that's a take coming in on some of these consumption names. Vineet, I also want your take on Reliance, but before that, I'll invite you to listen into the exclusive story that my colleague Anurag is breaking. He's talking about how they're likely to go big when it comes to their financial services business. Remember, that is being headed by Mr. Kamath, and now we understand that insurance is something that they're likely to foray into as well. Let's go across to Anurag to understand it better.
This is all set to start their insurance business, although they have yet to receive IRD approval, IRD license they are yet to receive. But as per our sources, the hiring for the insurance business has started, and few ex-PSU employees has been hired by the company, and KV Kamath, who is a chairman of Geo Financial Services. So few big names of ICICI Group is also expected to join insurance business of Geo Financial Services. Company will be venturing into both life and non-life business, and the plan, the roadmap will be unveiled in a forthcoming AGM. Apart from that, we know that Geo Financial Services plans to enter into wealth management, including lending. So technology will play an important role in tier 2 and tier 3 cities. So that is the plan. An exciting time for insurance industry is also going ahead, because we are seeing from last 4 years that the insurance industry is growing with double-digit growth, showing the double-digit growth, and now government is coming up with a new Insurance Amendment Act also, which has proposed the composite license and the specific insurance companies. So seeing all these, so they will see a exciting time, some sort of disruptions also in the insurance sector, and companies like LIC is also changing their strategy, preparing new strategy, because Geo Financial Services is planning to enter in insurance business in a big way.
So Vineet, you must have heard my colleague. What's your take of how big can Reliance actually get when it comes to financial services insurance? Could this really be something to get worried about for the other insurance companies and overall the financial services space?
It's a very competitive market as far as insurance concerned, and there are almost 24 players. And when you're adding one more, it doesn't really matter much. The guys who have got the lead in these sectors will continue to dominate, and Reliance will take a while to build out their business. And just because Reliance is getting into the business, just does not make sense to think that they will be able to, you know, uh, dominate the segment. It's all going to dependent on, the strategy, the growth prospects, and how they approach the insurance space.
What about Reliance itself? Would you say that the risk reward is favorable for the stock at the moment? At least that's the view coming in from CLSA at 2100, 2200. It's a value buy for them.
So see, Reliance is a dominant player in the futuristic businesses that they have, and we believe that Adani and Reliance were the major gainers in the hydrogen space. But with Adani having funding issues, I think it leaves only Reliance out there. And the Reliance has got a good action plan to build on these, the domain space. And hence, we believe that they can be a viable contender and do well with that. Further, they also have a lot of levers in play with regards to retail and the geo IPOs that can come. And hence, we believe that this stock at current levels is has got these reasonable value to go back to the previous highs.
I want to pull up some names within the banking space and the Nifty Bank Index in particular as well, because that too is moving from strength to strength as we speak. Names like an Axis Bank are powering that move on the upside. You've got an ICICI Bank as well looking fine. RBL Bank, for instance, is at the day's high. IDFC First Bank, even names like PNB, etc. They're all abuzz in today's trading session. So Kunal, just revisiting some of those private banking names and levels on the Nifty Bank Index, given that we're at 39,943.
Yeah, I think things have been changing quite positively for Bank Nifty now. I think we have to look at it in this manner that the Bank Nifty is raising its supports. So from yesterday 39,000, today we are almost at 39,500 as a strong support. Assuming in the next say 15-20 minutes, if we cross back about the 40,000 mark on the spot levels, then I think there could be renewed amount of put writing at the 40,000 option strike for the index. So that would indicate another 500 points jump on the support for the index, and that I believe is a very strong sign, because the more the supports keep on rising up higher, the more is the propensity of the markets to absorb any kind of a correction. So if the supports rise up by 1,000 odd points, then it indicates that the markets have a lot of buffer in terms of absorbing any kind of major market volatility. So I believe that these are good signs. Large cap stocks making a comeback. So you try and look at the list of stocks today. It's not the usual, the mid cap and the small cap PSU banks or the private sector banks which are actually doing well. It's the large caps formidable name. That I believe is also a sign that the move could be more endurable for the Bank Nifty. So particularly on the likes of HDFC Bank, ICICI Bank making a strong comeback for itself, Axis Bank I think about 850 plus levels. IndusInd Bank has also managed to show some good price performance. So large cap solid names making a comeback is always a healthy sign. I would just wait out for a confirmation about the 40,000 mark. So assuming in the next 15-20 minutes we manage to break past about those levels, we can decisively expect that the markets could probably move the supports higher to 39,500 to 40,000 plus for the Bank 50.
30,000 is critical on the Nifty Bank, and yes, while it is the large caps that are leading the way, there's also names as we flagged off like a CSB Bank that are doing quite well, a DCB Bank for instance. So across the board you can see some of those names that are perking up in trade. But on the flip side as well, take cognizance of the likes of a TeamLease for instance. That stock is seeing a price volume breakdown. There's SIS as well that's come under a bit of pressure. Just pull up some of these names on your screen. Fine Organics for instance too is another stock within the Nifty 500 that's under a bit of pressure. Let's get in a view on the charts, Naresh. TeamLease, SIS and Fine Organics.
So, a lot of these stocks have been in a downtrend. TeamLease has been in a downtrend for quite some time. It saw a big volume dump around the 2,900 mark. It's not been able to cross that. So, would be still an avoid. Same is the case with Fine Organics. A major top is in place at 7,000. It's been a slow drift. This could continue lower only unless and until we start crossing 5,000 levels, which is still very far away. So all these names are stocks which were expensive on valuation parameters, and a lot of stocks which have topped out in this category have just continued to drift lower and lower. So would not say look out for a buy on dips here or try to bottom fish. Just avoid it.
Stay away from some of these stocks as of now. Kunal, I wanted to also quickly get in your take on gold prices as well, because we had seen it scale up, hitting those yearly highs, and now I think there has been a little bit of a retreat. What's your take?
Well, it's bound to be that after such a 6,000 odd point gain on the rupee terms and more than I think $100 plus mark on the dollar terms, it's bound to be that the gold prices would get into a correction, and it's more to do with the risk adjustment. So since the last many days, it was more to do with the gold being a safe haven and the money flowing into that kind of an asset class. But now when the markets have settled back into some sort of a bounce on the equities, it's bound to be that gold will also take a bit of a setback. But I believe that we have to look at this in the next 1 to 3 month kind of a context from here on. So something which we flagged off, for example, in the fag-end of 2022, that gold and silver would be the two asset class which would dominate the first few months for 2023 and get into a strong recovery. I would now expect that this recovery and the rally which started off for gold would now trickle into the next 3 to 6 months kind of an uptrend. So I would expect at least another 5 to 10% kind of an upside for gold in dollar prices. So that should probably take the Indian rupee gold prices back to a 62,000, 63,000 zone over the near term.
Okay, at least a 5 to 10% gain on the US gold prices. That's word coming in from Kunal. But Vineet, just before we let you go, you have a knack for finding those niche stock ideas. Do you have anything particular that's looking interesting to you at this point of time? Top stock bets?
We stick to the large caps, and we like AC International. We believe that the company has got a very good order book. It's got 6 to 7 verticals that it operates across. And although the stock has been up a bit in recent times, we still believe that its valuations are very, very benign, and we expect this stock to perform handsomely going ahead.
So KC International, that's a top bet coming in from Vineet. We'll let you go on that note. Thank you so much for joining us today. On that note, in fact, we'll slip into a very short break as well. Nifty at 17,107, Sensex looking smart with a gain of over 400 points, and the mid-cap index also participating. Welcome back. Well, in fine fettle, that's how the market is shaping up at the moment. 130 points higher for the Nifty. The advanced decline is looking smart, and a lot of stocks which are buzzing around. In fact, on the gaining side, we have Anupam Rasayan, which is up around a good 8%. Five-star business is also perking up 8%. Remember, we had a conversation with the management earlier, wherein they talked about that even in the worst-case scenario, the NPA will not shoot up beyond the 2% mark. They're not looking at raising any further funds for at least 3 years, and the growth momentum should be sustained. So that stock is up 8%. Sterling and Wilson Solar, of course, is reacting to that 2,100 crore order inflow. And then UTI AMC, HDFC AMC are some of the other stocks which are buzzing around. On the losing side, GAIL is an ex-dividend adjustment, so that's why it's looking down by 4%, but not really so. And a couple of these hospital names, that is Narayana Healthcare and Fortis Healthcare, are coming under pressure. They are seeing cuts of around 3%, and even Metropolis Healthcare is a stock which is down about 2.5%. So healthcare on the back foot today. But let's try and connect with Shibani Sarkar Kurian of Kotak Asset Management to try and understand how the market momentum is actually getting placed at this point of time. Shibani, hi, thank you so much for making time and speaking with us. First up, the market seems to be out of the woods for now, but is that something that you can say definitely that perhaps with the kind of shorts that are there in the system and the fact that tomorrow is a Fed meeting, maybe the worst is behind?
Yeah, hi, good afternoon. So what we have been maintaining is that given the uncertainty that is there in terms of global macro environment on inflation growth, interest rates, as well as what is now happening with the banking system globally, markets are likely to remain volatile and will be pretty much data dependent. When you look at Indian markets, given the fact that this calendar year we have underperformed our emerging market peers, our valuations are looking far more comfortable than what it was last year when markets were outperforming. Long-term valuations for India on an absolute basis are back to trend levels. And even on a relative basis, our premium to emerging markets has come off. And therefore, that provides some amount of downside support. So what we believe is that markets may remain range-bound and volatile in the near term. I think it's going to be a year when we have to clearly focus on companies and stocks which are able to deliver superior earnings profile, where valuations are on your side. So this is something that we've believed from the beginning of the year, that this is going to be a year where there will be wide dispersion in earnings, both at a sectoral level as well as at a stock level. And therefore, trying to pick stocks where you have earnings growth visibility, where valuations are on your side, is going to be important. Currently, we continue to be more positive on domestic facing sectors such as financials, infrastructure, manufacturing, capital goods, and automobiles, where we continue to believe that earnings growth trajectory will possibly hold up going into FY24.
All right. Shivani, what's the outlook when it comes to the entire, retail space? Just recently as well, we had some pretty optimistic reports on this sector, seeing strong growth down the line as well. Would you like anything, or could you identify some bets, even newly listed companies within the space?
So when you look at the overall consumer retail segment, what we have really seen post-COVID, a lot of revival in terms of urban discretionary consumption, which resulted in growth coming through fairly strongly. Of late, what we have been seeing in terms of data points, at least some of the high frequency indicators pointing to some amount of slowdown where discretionary consumption is concerned. What we believe is that this could possibly be some sort of a temporary phenomena where, and this is a data point that we will need to monitor going ahead as well. Consumption continues to be one of the key drivers from an overall growth perspective, and from a longer term basis, we do believe that consumption should come back. Now, when you look at two segments of the overall consumption basket, as we were discussing earlier, urban consumption and urban discretionary consumption is something that picked up strongly post-COVID, while rural consumption has been lagging and has been lagging so far. Now, of late, when you look at some of the data points, it does seem to suggest that bottom of the pyramid or rural consumption is starting to see signs of improvement, primarily on the back of improvement in terms of wage growth and some amount of inflationary pressures also cooling off, which is resulting in improvement on real wages as well. So rural is a segment that we are watching out for in terms of their contribution to the overall consumption story where India is concerned. So segments such as FMCG, maybe some segments which are related to the rural lending part, tractors, etc. These are segments where we are looking out for. And if there is a rebound in terms of rural consumption, some of the segments where valuations have corrected in this space will possibly be something to look for.
Discretionary spend is on an upturn, but even the urban consumption is something which has been firing on all cylinders, especially the discretionary spend on travel, because day after day we have been reading headlines as to how travel spends have been going up, and that's quite visible by the demand coming in from the aviation sector as well, because remember, right from Air India to Indigo, etc., they've all placed big orders for the fresh aircraft, and this is something which the Boeing management is also alluding to. In fact, we spoke with the president of Boeing India exclusively to understand what he has to say about the deal that they made with Air India recently. Listen in.
I think that we're too early to know kind of what the consequences of the bank situation in the U.S. and Europe and other places is going to be. I think at this stage, we see really no slowdown at all in the demand for aviation. Coming out of the pandemic, aviation has really stunned the world in terms of how quickly it has recovered. And if you talk to all of the airlines around the world, what they will tell you is that they see no end in sight to the demand that's coming from their passengers. And so I think that's still going to be a very strong part of the economy here as we go forward.
All right, let's move right on then, identify some of the names as well on the Nifty 100 that are active in trade. And Naresh, wanted to get in your take on ABB on the charts, looking pretty smart. And have you had a look at the charts of Havells as well as Muthoot Finance?
So ABB has been interesting. The stock has slowly and steadily again picked up from that recent low in December, from 2,700 back to almost 3,400, close to an all-time high. So out here, it seems like the capital goods momentum continues. Siemens also is near at a 52-week high. We are looking at L&T very close to a short-term breakout. So it's very clear capital goods continues to be a sector which is in momentum. So expecting ABB also to slowly and steadily go higher, but my top pick out there would be L&T. Muthoot Finance, on the other hand, is a stock which has gone in a overall lower top, lower bottom formation. The stock had come close to a breakout at 1150, which flopped and since then it has only drifted lower. The last 2 days it has seen some bit of a build up, some volume pickup, but too early to call a trend here. So would wait and watch. This bounce could take it towards 1050, which would be tough to cross.
1050 could be a bit of a resistance level for Muthoot, but stay positive on L&T. That's the word coming in from Naresh. But let's get the BTST ideas also out of the way. Kunal, you go first. What's on your buy today, sell tomorrow list?
So two buy calls which I would suggest. The first one is Anantraj Industries. Apparently, the stock is confirming a huge breakout from a series of resistances. It's already moved up higher to 120 plus levels. So traders could look at a buy even at current zone 130 to 134. Now could be a revised target on the upside. Stop loss at 113. And the second would be one Ultratech Cement. In fact, one of the sectors which have actually managed to withstand most of this phase of market volatility has been at the cement pack. So Ultratech Cement is what I would recommend as a buy. Targets are 7,500, stop loss at 7,200.
All right, let's get a move on then and get in Naresh, your recommendation.
First is the buy on IGL. The stock holding on for the whole day, could see some follow up tomorrow as well. Stop loss at 435, target price of 450. Second is a buy on SBI, reversing from the supports. Stop loss at 518 and a target price of 535.
That is the top recommendation coming in from the race at this point of time. But you know what? Tata Group has been talking about consolidation within a lot of its businesses, and metals is something that they've already announced that a lot of the metal companies will get integrated with Tata Steel and others as well. But that is also providing some sort of opportunity for the investors to make money out of the arbitrage as well. Harsh has done some analysis as to where that arbitrage opportunity really lies. Harsh, tell us more.
Well, yes, Anisha. So when we're looking at there are largely four companies which Tata Steel is going to be, or rather companies which are going to get merged into Tata Steel. One of them, of course, being TRF. Now, TRF trading at roughly 160 bucks a piece. So 10 shares of TRF warrant you to 17 shares of Tata Steel. Tata Steel shares currently 17 shares of Tata Steel at market value is 1780 rupees a share, which leaves you with a gain of 11%. Now, mind you, this merger is expected to be effected in FY24. So in the coming year, that merger should go through. So if you want to be part of the arbitrage, of course, you need to hold the stock for at least a year. Now let's move to Tinplate. Tinplate, same calculation, same math, 3,100 for 10 shares. And then you have the valuation or the gap between Tata Steel as well as Tinplate at 11%. Now, when I'm looking largely at one or two reasons for this differential, it's also the dividend yield. Tata Steel has a larger dividend yield, around 5%, versus some of the other stocks which are going to get merged into it. But largely, 11% difference is still high, and if you have a 1 year holding period plus, then of course you can make use of this particular arbitrage opportunity.
Interesting arbitrage there available, but of course you need to be patient and hold these stocks for a little longer. But Shubhani, your take as far as the entire metal space is concerned, would it be at the top of your pecking order, at least in the top three sectors that you're positive about, or do you believe there are other opportunities which are quite more lucrative?
No, so metals is a sector where we've been underweight, and if you look at the sectors where we have typically been overweight and where we have larger positions has been sectors which include financials, which include industrials and capital goods and automobiles. Overall, in the metals pack, what we believe is that volatility is something that will continue. It's a cyclical sector. Of course, there has been some hope of demand coming back with China reopening. But within the metals pack, the way we look at both the ferrous and the non-ferrous space, at this point in time, our preference is for ferrous over non-ferrous. On the ferrous side, non-ferrous side, we are seeing that aluminium prices are likely to stay weak in the near term, primarily because of one, weakening of coal prices globally, as well as subdued demand. And therefore, this sector is something that we have typically been overall underweight across our portfolios.
Okay, stay with us and let's move on then and hear it out from Lakshmipati Deenadayalan, the CMD of 5-Star Business Finance. He believes that net interest margins will be stable around 13 to 14% in the next 2 to 3 years, saying that they don't need to raise capital even at 30% growth.
You see the NPAs or 90 plus of 5-Star is always stable, and we remain at 1 to 1.5% even during the vulnerable times. Sustainable NIMs in steady state will be around 13 to 14%. That may kick in next 2 to 3 years. But next quarters, if you see, the NIMs will be in the same level. As you said, that is purely based on two factors. One is 5-star is under leverage. Our leverage is around 1.8. So more you borrow, more the interest cost comes in. Second, I think our cost of funds from the banks where we borrow has come down substantially, close to 150 bips in last 4 to 6 quarters. That is not yet passed on to the customers. We are just waiting for the interest rate cycle to peak, then take the call. Even at 30% plus growth year on year, for next 5 years, we don't see any capital to be raised for the purpose of the business. So I don't think so. We'll come to the market for raising any capital in next 3 to 5 years.
All right, that's the view coming in from the management of 5-star business. Meantime, Shibani, where do you stand when it comes to what the expectations are from the upcoming earnings season? Any particular sectors that you'd be watching out for positive surprises?
Yeah, so I think the upcoming earnings season is going to be important. Overall, if you look at what's happened in the last few earnings and last few quarters, we've seen some marginal downgrades in terms of earnings expectations for this current year, which is FY23, while FY24 and 25 earnings expectations have been largely intact. Now, if you look at the way commodity costs have behaved, hopefully we should start seeing improvement in terms of margins as input cost pressures come off, and therefore quarter on quarter, our expectation is that margin should improve. However, at the top line on the demand front, what we have seen is that while overall demand has been holding up fairly well, there has been some pockets where discretionary consumption has slowed down, and therefore top line growth is something that we would watch out for in this current quarter. Also, if you looked at the earnings so far, and in the first 9 months, one of the sectors which has been a driver for earnings has been financials. And therefore, how margins play out for banks incrementally, not just for this quarter, but for the next few quarters, is something that is going to be important from the overall market as well as the sector profitability perspective. Here, our view is that margins should improve or stay stable going into Q4 for the banks, especially because there has been an interest rate hike, and therefore repo rate linked loans should start to improve in terms of yields, as well as the fact that MCLR repricing would happen. But going into FY24, actually not just this quarter, but more FY24, the trend in terms of loan growth, which has been holding up fairly well, as well as margins, has an important bearing for the market as a whole, where earnings grows. So far, if you look at consensus estimates for FY24, consensus still believes that Nifty earnings profile should remain in the mid-teens in terms of earnings growth, and that therefore that is a number that we would closely watch out for in terms of any kind of disappointments going forward. But overall, we believe that this is a quarter where you should see some amount of margin improvement, especially given the fact that commodity costs have come off, and therefore sectors such as, for instance, cement, which should start seeing incremental margins improving on a quarter-on-quarter basis.
Okay. Naresh, I want your take on some of these key buzzers at this point of time, and there are 2-3 pockets which are actually doing well. One is the chemical space, so Anupam Rasayan is up around 8%. BSF India is another stock which is up 5.5%. And from the broader markets, a small cap name Valiant Organics is also up as much as 10-11%. So all of these stocks are excited. The second pocket is the financial services. So 5-star is something that we just flagged out to you. But separately, KFin Technologies has also seen a sudden spike of around 7%. And lastly, there are heavy volume build up on this QSR names as well. So Sapphire Foods had suddenly spiked as much as 10%. It's cooled off, but it's still high by 5%, and very heavy volumes as well as far as Devyani International is concerned. So a lot of big moves happening in the last 5 to 10 minutes itself. Naresh, any of these stocks that is catching your attention?
So 2 of them specifically. First would be looking at the whole QSR space. We've seen a lot of block deals happen right now. So Devyani is one which has corrected from 210 all the way down to 140. I think there are a lot of supports although the data is not much, but a lot of support around 135 to 138 levels. That is where one should expect the zones to actually support, and some bit of a bounce back. Same is the case with Sapphire Foods. The stock has corrected from 1550 to 1150. In this case, the supports are a bit lower at 1050 to 1100. So both these stocks could actually see some bit of a short-term bottom here. We've seen a short-term bottom even in the Jubilant Foodworks right now, which has seen a bounce back of 5% to 7% in the last two sessions. So some bit of a pullback trade could be played out in both these names.
Naresh, other than that, what about some of the other stocks that are having a bit of a rough run? What's the outlook, for instance, on a KPIT Tech as well as Metropolis?
So KPIT Tech is something which has done really well in the whole IT pack. The stock actually hit a new all-time high yesterday. A little bit of a drift would be normal. Even if it goes closer to 840 to 850, that would be a zone to buy with a stop loss below 830. Metropolis, on the other hand, has actually been a one-way downtrend ever since January of 2022. The stock is now well closer to the pre-COVID lows, or the COVID lows. So a break below 1100 actually makes the trend much more worse. So technically, still in a downtrend, no need to be looking at a bottom out here.
2.5 minutes left for the trading session. So on that note, we'll thank Shubhani as well as Naresh and Kunal for joining us on the show and helping us wade through the market volatility, because that continues to be the case. For now, 17,100 is being held. But remember, tomorrow is an important day with the Fed decision lined up. And of course, we also have some other events with respect to the China Evergrande Group detailing their debt structure, as well as Persistent System holding a board meeting. And tomorrow, of course, there's Gudi Parva or Ugadi as well. So that also has a bearing. But no holiday for the markets. But yes, at least next week there is one coming. So something to look forward to. But talking about today itself, a good end. That is how we are wrapping up the day. Close to the highest point of the trading session, 17,110. Sensex 2 above that 58,000 mark, I beg your pardon. And even if you look at the Bank Nifty, that managed to recover quite smartly, and we saw a bit of a move of around 450 points, or rather 540 points now on the Bank Nifty. So a definite outperformance coming in from that particular space. HDFC Life, Reliance, Bajaj Finance, Bajaj Auto, Titan, these were your top movers at the index level, while on the losing end, it was HUL, Britannia, which were coming under pressure, then Tech Mahindra, TCS, and the entire IT basket did not have a great day. In terms of the broader markets, Anupam Rasayan from the chemical pack, BSF India, as well as Valiant Organics are some of the stocks that deserve mention. Gland Pharma also towards the end of the trading session saw a spike of 7%, and 5-star after our interaction with the management and the positive commentary saw a rub-off impact, so 7% higher on that one as well. Sterling Wilson Solar was a case of order win reaction, so 6.5% gain coming in there. Eon Exchange as well going home with a gain of around 7%. Another pocket which was clearly active today was the AMC stocks. So UTI AMC was up around 5%, HDFC AMC saw a gain of 5%, and this is after a lot of mutual funds have actually parked their money into these names. So a bit of a momentum build-up happening for these counters as well. What else was buzzing? Well, insurance space is something that got attention because of our exclusive story that Reliance might be foraying into that. So New India Assurance was up 5%, and Reliance, of course, itself was one of their top gainers, 3 to 4% move on that one. On the losing side, Capri Global down 7%, IIFL Wealth Management down 4%, Trident, Fortis Healthcare, Narayana Healthcare, GMR, Metropolis, these were some of the top losers. In L&T Tech 2, after Citi came out with a fresh report talking about a negative catalyst watch and saying that over the next 30 to 90 days there will be a drawdown on that stock. That also saw a cut of around 3%, but I have to say that overall the market was actually quite positive ahead of that big event which is lined up. So after having a week last week, at least there is a bit of a green that we can witness on the screen around today as well.
And the breadth as well telling the tale of how the sentiment is skewed in favor of the gaining side. So on that positive note, then we'll wind it up on this edition of Closing Trades. Thanks so much for watching. Your trades lined up next.